Hello everyone. Welcome to my YouTube channel. Today is 14th of January. So happy Makar Sankranti, happy Pongal, happy Lodi to all those who are celebrating. Today I want to talk about a stock that I have recently invested in. It is growing at like 25% CAGR, sales are growing at 20% CAGR and all of that. So I want to give you my investment thesis so as to why I decided to invest in the company. And I'd like to convince you guys to invest in it. But again, this is not an investment advice. This is just why I decided to invest in the company. Okay. So the way I want to structure this video is initially I want to talk about the current market sentiment, the way the market is going, the direction in which it is going. Things like what the big players are doing. Are they sitting on cash? Are they deploying it? What are they doing? What sectors are not performing as good or have not performed as good as the index in the last maybe 2 years, 3 years. I'll be covering all of that. And then obviously I'll cover about the stock that I have picked. It has the highest allocation in my portfolio. Okay, so first let's start by seeing where the market is headed. We can clearly see from October 2024 it has been headed in downward direction. We have seen like an approximately 12-13% correction in the market. After making highs of around 26,000, the market is currently trading at around 23,000. And by the market, I mean Nifty 50, basically the top 15 in stocks. And the company is a mid cap company, so I'd also like to see how much the mid small index has fallen. It has fallen by approximately, so from the highs of September, it has fallen by 14%. So basically, what we are seeing is the market has recently fallen. Everyone is fearful. Everyone is asking what to do. Should we sell? Should we buy? Is a crash coming? Is a recession coming? And all of that. Basically, when the market falls, it gives us a great opportunity to buy some things that we want to be buying. So, for example, I want to buy E2E networks, but it's available at a PE of 250, and I don't want to buy it at that price, right? But when the market falls, something that is available for a 35p, 40p, it becomes available at a 20p, 18p. I can consider buying that. Anyway, so the market has fallen by 14%. And this is the time we should be looking for some good companies which we've heard of but were very costly, so we couldn't enter them. Now we might want to take a look at them again and see if they're available at a bigger discount. Anyway, so what have been the big players doing? One of the biggest mutual fund houses where I think most of us have been doing our SIPs has been Parag Parik, and they have their famous Parag Parik Flexi Cap Fund. So yeah, so Parag Parik is sitting on a 14,000 crore cash pile, which is approximately 20% of their AUM. So basically 20% of the portfolio is still in cash. So they are waiting for the right opportunities to deploy this cash. And it's a flexi cap fund, so we can't say that a particular index is overvalued or a particular index is undervalued, because in the flexi cap fund you can invest in a range of market caps. So we can't say that the overvaluation is corresponding to a particular market cap range. The entire market in general is overvalued. Another big guy in the stock market called Siddharth Bhaiya. They have a boutique portfolio management fund. It's called Equitas. They have cash levels of 80%. So this is a little crazy, but it is what it is. This is what they have said in an interview on NDTV Profit. So yeah, so we can clearly see that the big guys are sitting on huge levels of cash. But there is this thing called the market mood index, which basically tells us whether the market is being greedy or it's being fearful, like people are not investing or people are investing heavily in the market right now. Because when the market is greedy, right, values are at an all-time high, valuations are at an all-time high, prices are at an all-time high, and it's not the right time to enter in general, but people anyways enter during the greed phase. Anyways, right now if we see, the market is in an extreme fear phase. Basically, obviously, like if the indexes fall by 12, 13, 14%, everyone would be fearful. Like, because when the index falls by 14%, it's highly likely that your individual small cap or mid cap stock has fallen by around 20, 25%. For example, yesterday I remember Vari Energies, I think, Vari Energies or Vari Renewable, one of them like fell by 20% in one day. So, yeah, obviously. So, the market is very fearful right now, but I think this gives us a great opportunity to enter the market, buy the stocks that we want to buy at a great valuation. Okay, so let me now start talking about the stock that I built a position in recently. So the stock is called Equitas Small Finance Bank. So what is a small finance bank? Small finance banks were introduced by RBI in around, I'm not sure when, I think it was 2016 or something, basically for financial inclusion and all of that. So, the way a small finance bank operates is, first of all, their goal is to include small farmers, small and micro enterprises, and small business units in the formal economy, like get them access to funds so that they can scale their operations and all of that. Another constraint is that 25% of their branches should be in rural areas. And another constraint on small finance bank is that 50% of their loans should be less than 25 lakh. And the company is mostly operating in Tamil Nadu, Maharashtra, and Karnataka. So, like, pretty high growth regions they are focusing on initially. I think the company is based out of Chennai. So the main promoter of the company, I'll also talk about him. His name is P. Vasudevan. His expertise lies in vehicle finance. He worked for Cholamandalam Group for about 20 years in the vehicle finance division. His expertise lies in getting secured loans. So what is a secured loan? Is when someone doesn't repay the loan, you have a security to reclaim your stock. So let's talk about the company in a little more detail. So the company is the market cap is 7,849, 8,000 odd crores. Like it's a mid cap company. The P ratio of the company is very attractive. It's like 17.5. The profit to earnings growth ratio is stands at 0.57, and the price to book value is 1.3. So these are the numbers which say that it's very reasonably valued in today's market, where companies are valued at like 100 p, 250 p, and people are still buying them. So let's look at the stock price trend of the company. So we can see that the company is available at a great discount from its all-time highs. So last year in January, the company made a high of around 110, and right now it's available for like 60, 64, 65, 70 rupees. So it has like gone down by almost like 40%, 50% from its all-time highs. So it hasn't really participated in the rally of like 2024 wasn't there. It wasn't really a rally, but yeah, it has underperformed quite clearly. It has underperformed the index in 2024. But let's take a look at its sales and profit and loss statement. So we can see in 2024 it wasn't like sales or profits have declined. We'll get into this why this is a negative number. But for the timing, let's look at a quarter on quarter basis. There has been consistent growth, like from, let's say, from March 2022 they were at 900 cr, and in March 2024 they are at 1400 cr. So they have like grown by like 60-70% in 2 years. So it's not like the company is not growing at a great pace. It's growing at a great pace, but it's still available at a very low PE because the market hasn't been very kind to the index itself, like the Nifty Bank Index. Yeah, so we can see the revenue growth is there, the profit growth is there. So if you look at the revenue growth for the past 3 years, it has been at 20%, but the stock price has only moved by 5% CAGR. This is all CAGR. So 20% first year, 20% on that, and 20% on that. So clearly there is some sort of mismatch in the stock price movement and the sales movement. Now we can't say that this movement has already been priced into the stock price because it's available at a really low PE. So this is about the company. So now for small finance bank, right? The best way to look at their health is by looking at the constituents of its loan books. Okay, so let's look at their loan book. So I have this investor presentation of Q2 FY25 where there is a page on their advances where they have shown their microfinance loans, which is basically a loan of around 50,000, less than 1 lakh basically, which is like the most common type of loan that people take. It's not the most common in the, like, it's not the biggest constituent in value, but it's like the most number of loans are microfinance loans. So their microfinance loan book has decreased by 4% year on year. So basically Q2 FY25 it's 5636, and Q2 FY24 it was 5878. So they're trying to decrease the microfinance loan book, and for good reason. 16% of their loan book is microfinance loans. Small business loans is 41% of their loan book. Housing finance is 12% of their loan book, and vehicle finance is 25% of their loan book. Vehicle finance is what the promoter is an expert in. MSE finance is 4% of the loan book, NBFC is 2%, and others are 1%. What is others? It's gold, unsecured business, overdraft against fixed deposits, and all of that. So yeah, a very minor percentage, so it doesn't matter. In the entire loan book, the only part that is unsecured is this one and some part of this one. So approximately 16 or worst case 17% of the loan book is unsecured, and the rest 83%, 84% is completely secured. What this tells us about the company is that their loans are secured, so they're in a great position to give out more loans because the loans they've already given are secured, so there is not a lot of risk. But MFI, they can't do any of that, so they have been consistently trying to decrease this percentage. Other than this, okay, so the loan book is pretty healthy. Unsecured loans is approximately 17%, and the secured loans is approximately 83%. I also wanted to talk about the regional distribution of their loan book. I'll take that from screener. So if you look here, this is from Q4 FY24. Okay. Advances, basically 50% of their loans they have given in Tamil Nadu, 15% of their loans they've given in Maharashtra, and 12% of their loans they've given in Karnataka. So pretty industrial states. Geographically, they are not very diversified, but wherever they are in a good state. I mean, Tamil Nadu might have some problems related to weather and flooding and all, but and Maharashtra related to dry, like droughts and all, but overall pretty healthy geographical distribution also. Like Karnataka, sorry, Tamil Nadu exposure is a little high, but I think it's fine. Now let's look at their NPAs. So let's look at their NPA trends. So we can clearly see they have from September 2021 to September 2024, they have tried to, like, their gross NPAs have gone from almost 5% to almost 3%, which is good considering they have also like almost doubled their loan book. So yeah, gross NPAs are 4.32 and net NPAs are 2.46. So basically 2.46 is not for these NPAs, they don't have the provisioning. Okay, so now if you look at the last two quarters, the company has been making a financing loss for some reason. We'll get into it why that is happening. The main thing we want to see is that they've managed to keep net NPAs to less than 1%. But gross NPA, net NPA in general have been on a declining trend, and which is a good thing. Okay, let's look at some other ratios. Let's look at the NIMS, which is the net interest margin, which is basically the percentage of profit they're making by on the amount they are giving out as loan trends. Okay, so the net interest margins have been reducing. They have been reducing because of like increasing competition, and because they are giving more secured loans. So when you give a secured loan, you have to be a little reasonable and give a little lower interest rate, right? Because if you're giving an unsecured loan, you'll say that, for example, credit card loans, they are like, uh, I think their interest is around 30-40% per annum. Because it's a very high risk rate, they're just giving you the money and then they trust you to give it back. They don't take anything from you as a security, right? So because the company is going into is like getting more secured loans, and also because of increasing competition, their net interest margins have been on the decline, but it's still not a very massive point of concern. Daily average cost of funds, so basically the cost of funds is on an increasing trend. Again, this is because of increasing competition for deposits and all of that. NPAs are increasing. Gross NPAs have been increasing for like some quarters now, because this is mainly because of the stress in the MFI microfinance space. So basically the 15% loan that they were giving, mainly because of this. And PC provision coverage ratio is basically the amount of NPAs they have kept money aside for. So basically you have 100 rupees of NPA and they have set aside 67.71 rupees to cover these costs. Now the ROE has reduced by this much because they wanted to go below 1% net NPA. The reason they wanted to go below 1% net NPA was because they want to become a universal bank. Universal bank is like your ICICI, HDFC, SBI. They don't want to be a small finance bank anymore. What this would do is this would decrease their cost of funds like significantly, because the kind of loans they're giving right now is very risky, right? Because they're giving to underprivileged people who there's a high risk of default from their end. So yeah, so they want to be a universal bank is because the cost of funds would decrease. Certain constraints like 50% of your loans have to be less than 25 lakhs. If 25% of your branches have to be in rural areas, those constraints will go away and all of that. Yeah, so they are eyeing to become a universal bank in the near future. Maybe not immediately, maybe 3 years down the line, 4 years down the line, but yeah. So one more thing I'd like to cover is the growth of their deposits. So if you look at their total deposits is basically whatever money people have deposited in the bank. It can be term deposit, fixed deposit, current account, savings account, all of that. So if you see December 31st, 2023, basically end of last year, or the beginning of the last year, they had 32,385 CR worth of deposits, and now they have 40,738 CR worth of deposits, which is basically a 25% growth in deposits. CASA is like the cheapest form of deposit you can get, a bank can get. So CASA deposits grew by almost 10%, which is a good number. And CASA ratio as a, like, basically the percentage of deposits that are CASA deposits has roughly stayed around 30%. I don't think this is a big point of concern. the cost of funds has increased because one thing is that their CASA ratio has decreased. So the other type of deposits, they have to pay a higher interest. So the cost of funds has increased. Microfinance loans has decreased, right? And total gross advances, basically the amount of loan they have given out, has increased by 14%. So it's also very healthy. So they're like, you can see, right, the deposits are growing at a decent pace for the size that they have reached, like 40,000 crore rupees. That is like what, $5 billion, $5 billion. They're growing, still growing at 14%. Is a very like very impressive pace. This commentary they gave out recently, that 86% of the total advances is the non-microfinance portfolio. Basically, it's backed by something, it's less risky, has grown by 20% year on year. The bank has consciously slowed down disbursements in microfinance, leading to 11% drop in advances year on year. So basically, they have consciously like reduced their MFI advance. And they've also said that the stresses in microfinance is finally showing early signs of stability. So they're saying that they can like now move forward with at least maintaining the percentage that like they can still give 15% of their loans as microfinance loans, which would be high interest loans, because they see that the microfinance stress is showing early signs of stability. Okay, now we have like covered a lot of things, like a lot of numbers. Most of them have made sense, like why the company is such a good buy. But I'd still like to cover why I think this bank would do well in the next 2, 3, 4 years. So yeah, so now I'll talk about why I think Equitas will do well compared to its peers. So these are like the top 4 points in my opinion that the market will reward sooner or later. At least in a 3, 4 year period, I see this stock being and the investors being rewarded pretty decently. So the first point would be leading the pack in the MFI disbursement slowdown. Basically, the bank was the forerunner in decreasing the microfinance disbursements, which was the leading risky, like it's the riskiest and the most stressful kind of loan that has been given out. If you look at this slide from their investor presentation, on June 2023, since June 2023 rather, the disbursement in the MFI sector has, for the industry, it was growing, and then it decreased when the stresses were like in our face, like when everyone knew that there is a stress in the market. But Equitas was decreasing its MFI loan book since June 2023. So they were able to decrease it by 30% in 1 year. This is like an index value. This isn't really a linear value, but basically they were able to do a very good job of decreasing their MFI portfolio. Whereas the other banks, they had a 50% jump, and then they were able to like maintain their MFI loan book basically. This is the industry versus Equitas comparison. So Equitas did way better than the industry in this risk mitigation by giving less loans to the MFI segment. This just speaks volumes about the foresight of the management, how they were able to look at a problem way before it appeared, way before anyone else was talking about it, and handle it. Now the management is also saying that the microfinance is finally showing early signs of stability. So they're saying that the problem is manageable, which can basically translate to meaning that they can afford the 15% of their loan book to be as risky as MFI. Yeah, so I think the management has a great foresight, which would obviously, they'd obviously lead the company really well. So this was the first point in the favor of Equitas. The second point is universal banking license. The promoter has talked about this n number of times that they want to be a universal bank. This would reduce a lot of constraints. This would reduce the cost of their funds. This would like allow them to go into a variety of market segments which they can't because they're constrained by the small finance bank definition. So yeah, so I think this would be another trigger for the stock growth and the company growth whenever these guys get their universal banking license. It should be in the near future. Like it won't be in the next quarter or the next year. It might take like 2, 3, 4 years. Yeah, but it's still like on the cards. It's like you can see it happening in the near future. So yeah, universal banking license is another one. Healthy deposit growth. I think I've shared this, but at the risk of redundancy, I'll still make this point again. There is a good competition for deposits because, don't quote me on this, but some banks promoter was saying that a lot of people are not keeping their money in bank accounts, they're putting it in the stock market. So the competition for deposits has increased significantly, and they're still managing to like grow by 25% and grow their CASA by 10%. So it is so they are doing a commendable job on their deposits. The deposit growth, they have managed to grow their deposits by a healthy amount. Yeah, last but not the least is they have, I think, around 415 branches or something. I remember reading it in the transcript of the con call, the last con call that happened. And when they're asked about geographical expansion, right? So we saw that like almost 80% of their loan book, 80% of their deposits come from Tamil Nadu, Maharashtra, and Karnataka. So when they're asked about whether they want to like geographically expand more, they want to go to north, they want to go to east, they want to go to west, and all of that, the management gives a very stable response. They are not like overtly aggressive that they'll expand everywhere. They're not like, they're cautious but intellectual, if for the lack of a better word, intellectual response, where they're mostly focusing on increasing the branch capacity by a 8-9%, but focusing more on increasing the productivity of each branch. So in the latest con call, the promoter was telling about that 1.6 crores is the monthly disbursement from each branch. So basically, each branch on an average is giving out of loans about 1.6 crores per month, and they're talking about that this was much lower, and they want to keep increasing this per branch productivity, and 1.6 should ideally keep going up in terms of improving the volume from existing branches. And even in the last year, they've added like 60 branches, and they'll be adding like 40-50 branches. So it's a very balanced approach for expansion. They are not hurrying the geographical expansion at the cost of per branch productivity. I think this is a very good like a very wise approach taken by the management. To summarize all of these into one point, it would be that I am very trusting on the management. The management has done a great job so far. They have been growing by a good number. They have taken the right amount of risk for the right amount of reward. I mean, I'm not a banking expert, but I can see that compared to other banks, for example, Ujjivan Small Finance Bank, their 40 or 50% loan book is, don't quote me on this, but their 40% or 50% of loan book is MFI based. And there are other banks which are more secured loans, like AU Small Finance Bank and I think Utkarsh Small Finance Bank. Those are like almost similarly valued, but AU Small Finance Bank is much bigger than Equitas Small Finance Bank. So I don't see as aggressive growth as is possible for Equitas. And also the management makes me much more comfortable. So yeah, guys, this was it. This was my first video. So any and all feedback is welcome. If you want me to cover anything else, you can like put it down in the comments. Like, share, subscribe, hit the bell icon. You know the drill. Thank you so much.